So it's clear on Friday, Tesla had a very strong day. Tesla stock intraday hit fresh new highs of this cycle, and I think that was a taste of what is to come. Now here in this video, I want to talk about just that, where Tesla stock could go before and even after earnings, and give you guys a rough estimate of what I'm expecting from Tesla's earnings, and obviously what the share price is going to do following those earnings. On top of that, I want to talk about the latest developments from this Twitter Space call that we seen at 4 p.m. on Friday after the markets closed, with Elon Musk discussing the future of XAI and how that will be intertwined with his other businesses such as Tesla, the Boring Company, SpaceX, as well as Twitter. And on top of all of that, we're going to get into this video with a video from CNBC with probably one of the most legendary bulls and definitely one of the most legendary bears on Tesla stock, just to see what arguments they are making heading into Tesla's earnings. I hope you guys get a lot out of this video. If you do, hit that like button as well as subscribe to the channel to stay up to date with everything going on in the markets, as well as specifically with Tesla stock. If you want to take it to the next level, come trade with me every time I make a trade, if you so choose to. Link down below in the description of this video. That is not a texting kind of alert thing. That is somewhere that you can come ask me questions. We can interact. You can grow with the community as well as me myself. So let's go ahead and get straight into it.
He was a big thinker. Let's take it to our next guest. So joining me now is Wedbush Securities Managing Director Dan Ives. Covers all things tech, a longtime bull on Tesla. Also, GLJ Research founder and CEO Gordon Johnson, longtime bear on Tesla. Two very familiar faces for CNBC here. Thank you both for joining last call. Let's start with the bull case, because the bull case has been right, Dan, so far. And you've been behind this kind of thing for a good while now. The Tesla valuation, it doesn't worry you at these levels?
I mean, not at all, because I think what Kathy is talking about is our thesis that the sum of the parts in the Tesla story is just starting to be discovered. I think Supercharger was really where the light bulb went off in terms of Ford and GM. Now really, going to Tesla, where this is sort of what I view as a game, set, match situation. And next is going to be batteries and then AI, which is why I believe this is a company that's still in the early innings of finding its potential. I think next week's another trophy case quarter in terms of for Musk and Tesla. And in my opinion, the bears will continue going into hibernation mode as Musk and Tesla flex their muscles with the next phases right now of the growth story playing out.
Gordon, you're the bear.
Which likely to be Cybertruck, likely to be continuous updates on new factories and what we can expect next. There was rumors today about serious discussions of a factory in India. This did not come from our financial media. This came from the Indian news, so directly from the source itself. Things of that nature, when we can expect margins to increase, what the demand picture looks like, all of these things will be answered coming on Wednesday, and that's going to mean potentially a lot of volatility, but in my opinion, a pretty big upside move, as you do currently have the largest number of people betting against Tesla right now than you have seen in the last 2 years. You have 96.5 million shares currently sold short. Short sellers have taken more losses, like this guy right here, a great example of a short losing his ass. Lost over $15 billion so far in 2023. That is more than they lost in 2021. That is almost half of the amount that Tesla shorts lost in 2020, when Tesla shorts lost about $40 billion because Tesla rallied 750%. The loss in perspective terms is getting massive. And if we do see another standout, for the record book quarter, as Dan Ives says, well, that's only going to mean one thing: higher for Tesla stock. But let's continue on with this video, because this guy has this bear has really no idea what he's talking about. He does make a couple good points, but really they're not even in the right light of things, and some of his information is just straight up lies. So let's go ahead and listen to the rest of this.
Say this, all right, and this is with all due respect, because you're a very smart man. You do your research, you do your homework. There are valuation models out there that totally agree with what you're saying with regard to Tesla and why it should not be trading where it is. But the market has been disagreeing with you. What is it going to take for the market to realize that you are correct in saying that Tesla is overvalued at this point?
Right. So, Dom, thanks for having me. I'll just remind you that in January and February of 2000, internet companies in both of those months doubled, and then they fell anywhere from 90% to 100%. So the market can get disassociated with reality. With respect to what Dan said, I feel like he's speaking in vagaries and platitudes. Let me explain. So with Tesla in 2Q, right, you have a company that, according to car gurus, over the past year has cut their prices 35% for their cars. Their prices have been cut 35%, whereas Ford's prices are down 1%. GM's prices are actually up 1%, and the average car on car gurus is down 4%. So if you cut your prices significantly, you're going to get higher volumes. However, in Q1, their earnings were down both quarter over quarter and year over year. That's not a growth company. For the fifth straight quarter in a row, they've produced more cars than they've sold.
You could say the same thing about revenue numbers being down quarter over quarter and year over year for something even like an Apple. So that is just not even a fair statement to make.
I.e., they have a demand problem. And
Tesla has a demand problem. Wow. That's got to be the craziest thing I ever heard. No, Tesla cut prices to sell more vehicles, to sell more full self-driving, to make more money. Tesla makes, depending on their models, right, in between $5,000 and $9,000, again, depending on their models and what specifics you get with the vehicle. A little bit more than 5,000, around 7,000 to 9,000. That's typically what Tesla makes net profit on these vehicles. Well, full self-driving alone is $15,000, and the net profit on that is about 90%. So on full self-driving, Tesla net to the bottom line makes about $13,000. So the more vehicles you sell, the more full self-driving you should sell, which means you should sell or make more profits to the bottom line. It was a conscious decision from Elon Musk to grow market share by lowering prices because they have the margin to do so. It's easy to see why GM or Ford didn't cut prices. They can't. They don't have the margin. They literally can't. Tesla would strangle them out of the business. That's the bottom line, and that's obviously not going to be talked about by him. But nonetheless, let's continue on.
And you're talking about a company now that's going to see its gross margins drop from roughly 27% in Q2 of last year to roughly 16% in Q2 of this year. It's a car company. What car companies do is they cut prices to move metal. Tesla's doing it by the most. And remember, Warren Buffett reminded us in 1905, if you looked at the car industry, right, there were 2,000 auto companies. Nearly every single one went bankrupt. So to choose Tesla as the leader when they're really the BlackBerry of EVs, I think is a mistake.
Okay, all right. So because I'm watching, I can see, I have the benefit of seeing both of you guys in front of me right now. Dan, you've been shaking your head pretty much the entire time Gordon's been talking. Why? He does make some interesting points here. Tesla is cutting prices, and they are producing more cars and not selling as many as they are producing.
Yeah, that's been that way for 5 quarters now. Tesla's produced more vehicles than they have sold, and that is very normal. Tesla has lower inventory numbers than a GM or a Ford. And obviously, he's not going to make this comparison because that's not what the bears like to compare. But it's very logical that this happens because there is a delay from the time cars are produced to the time that cars are delivered. So I'm sure Tesla could be a little not as honest here about essentially what's going on, right? Just a day or two difference would make a big difference to the amount of inventory that they had. But following strict accounting practices, You're not allowed to do that. So, yeah, sure, Tesla has produced, 15,000 roughly more vehicles every quarter than they have sold, but those vehicles don't get unsold. They get sold the next week, right? So it's not a building inventory problem. He's not going to tell you, but Tesla's inventory has remained flat this whole time. The last 5 quarters, Tesla's inventory has not done anything. It stayed the same. And that's obviously because the cars eventually get sold, right? A week later, a couple days later, they get sold. There's no demand problem. There's no inventory problem.
What's wrong with the argument there?
No, Gordon makes great points in terms of course, the price cuts, and that's well understood. I mean, my whole point is look at deliveries this quarter. This is a company right now that's going to be on a trajectory toward 2 million deliveries for the year. And you should look at margins. It's going to trough out over the next 1 to 2 quarters. Battery costs are continuing to come down. And I believe it continues to be Tesla's world. Everyone else is paying rent. The margin story, the cash flow story. And look, me and Gordon are always going to disagree here. But I think the market's telling you right now that this is an inflecting growth story because of the sum of the parts. And that's why I believe supercharger, I know that Gordon disagrees. I think batteries next and AI. I think that's why eventually we're going to be looking at a $1.5 trillion to $2 trillion company over the next 2 to 3 years.
What are the margins on the supercharger? Do you know what the margins are? They don't make
$2 trillion. He said within the next 2 or 3 years. I think it could come a lot, maybe sooner than that. $2 trillion from here would put Tesla stock over $600 per share. To just for a little, kind of comparison to market cap to where Tesla stock would actually be.
Make any money on that? Why are you saying that's something to be excited about? You know that they make no money on that. So why are you on TV saying that that's a positive when you know it's a negative? They were forced to open up their superchargers to get the tax credits as a result of the Biden. Biden said you can't get the 7.5 unless you open up your superchargers. That's a negative, not a positive.
See, this guy, I mean, I think he's completely delusional, at least on Tesla stock, because you want to know why that's a positive? Well, Tesla's not done growing out the supercharger network. So a lot of people make the argument that Tesla owners are not going to want to wait in line with GM and Ford owners. That's not the reality of what we're going to see. By the time there is that many Ford or GM vehicles out on the road, EVs, if they ever get to that level, there's going to be a lot more superchargers out there. They're going to be far and vast. This is really not a problem. But the bears will try to say it's a problem.
But Gordon, to that point, when you go out, the reason GM, the reason Ford, the reason everyone's going to Tesla, they built it, everyone's calling. And now ultimately they will be able to monetize that when you look at them to 25, 26, 27.
But they get a free supercharging network without, if you buy a Tesla car, you're going to have to wait in line behind a bunch of GM, Ford, every other automaker. This is not a positive. It's a negative. So I don't know why you're pushing this as a positive. One other thing, Dan, this is a company valued at more than the next 10 largest automakers combined who is seeing earnings drop in Q1. They're already having to significantly slash prices, and they're not even selling what they're currently producing. And he's talking about building more factories. I mean, you have to know, this makes absolutely no sense. And I know the stock price is high, and I know you're excited about that, but stock price doesn't necessarily equal reality, and their margins are collapsing. Their sales are going to suffer because of these price cuts. And already in 2Q, they've cut prices in China, Australia, and Japan, soon to come US. So they're still having to cut prices when their competitors aren't cutting prices like they are. So supply, demand, price, they're cutting prices. That means demand is less than supply. Why is this something you're so excited about? I just don't get it.
All right, Dan, we could go on forever. I mean, this is a huge debate. I'm going to give the last word to you, Dan, because in my internal clock, I want you to respond to the litany of things that Gordon has just put out there. So the last word goes to you here, Dan, on why Gordon is wrong about the Tesla valuation.
As well as the bears, because and the reason they have been is because they view this as an auto company, and I view it as a disruptive technology company. that ultimately, year by year, continues to further monetize from EVs to batteries, and I think eventually to AI. And I think Wednesday night, I think we sit here and ultimately the Bulls win again. And I think this debate will continue to go on. Gordon raises great points, but ultimately, I believe the Bears, are wrong here in terms of how we view it.
Tesla is an AI company. Tesla's a car company. Tesla's a solar company. Tesla is more than a company. Tesla is a brand. I have not even heard one bullish analyst call Tesla a brand. And from a retail perspective, Tesla is more of a brand than anything else. In my opinion, Tesla could do whatever the hell they wanted and be successful, just like Apple. Apple can do whatever they want and be successful because the brand is so strong. And I think Tesla is creating a brand that will rival Apple and likely even be stronger than Apple, my opinion. And I think there is a lot of potential there on top of AI and everything else that Tesla has going on. That should not be overlooked. Now, to Tesla's earnings. Tesla's earnings are going to be wildly important for the course of Tesla stock over the next couple of weeks and certainly the next month or two. Now, I think it's important to note that Tesla over the past 4 quarters has beat earnings estimates every single time. The average being a beat of 11.71%. This is depicted with this graph here. As you can see, Tesla stock has rallied after every earnings, at least briefly, right? Back here was kind of the crash in 2022 when Tesla reported earnings. It rallied, and then the markets gave way themselves. And then what you seen in February was a rally. And then what you seen last earnings around was the bottom for Tesla of this cycle. And this is where things really changed for Tesla and really the way the markets were looking at Tesla. The sum of the parts valuation, like Dan Ives always says, it's true. The market started to value the supercharger partnerships, the possibility of licensing out full self-driving, as well as all the different businesses Tesla has. They started to look at these incrementally and say, hey, what's the Cybertruck going to do? What's charging going to do? What's this and that going to do for Tesla's overall business? Energy storage is going to be another big segment of this earnings report. And this is something that has really not gotten any credit before. But Tesla's energy business is actually doing some insane numbers here. You're seeing year-over-year growth of 150 to 200%. And this is likely something that starts to get talked about a little bit more as it becomes a higher percentage of Tesla's overall revenue number. We're expecting that could be as high as 10% of Tesla's revenue figure that we get on Wednesday. Now, the estimates from analysts are for 83 cents of earnings per share and $24.88 billion of top line revenue. Now, we're expecting some really good year-over-year numbers because the comparable to last year in 2022 for Q2, the Shanghai plant was shut down. Tesla seen around 253,000 deliveries. Not that many deliveries. So we're expecting a good year-over-year beat by a long shot. Quarter over quarter, expecting about a 6% increase to revenue and a similar increase to net profits, as even though maybe each vehicle was selling for a little bit less, Tesla overall sold more vehicles. So it's likely that Tesla's EPS comes in at about 92 to 93 cents per share. That's what I am compiling from my estimates, and I believe Tesla's revenue is going to come pretty much in line with this estimate, about $24.9 billion. That's what I would put on this. Now, the EPS beat is going to be good, right? Margins hopefully improving a little bit better than expectations. That's going to be good as well. As we've seen, workers in the Shanghai plant are starting to get some pretty big bonuses. I doubt Tesla is doing these bonuses without at least getting to a margin number in which executives such as Elon, would think the markets would be comfortable with. They don't want to start giving out bonuses and have a epic collapse of Tesla's share price coming after earnings. So that's one really big sign that you're probably going to get some pretty good earnings numbers for Tesla. More importantly, I believe commentary around when the Cybertruck is expected to start first deliveries, likely in Q3, is going to be very impactful to Tesla, as well as just overall reassuring investors about the demand picture, and even an update on the take rate of full self-driving. That could also be very big for Tesla's share price, and also if Tesla does raise their guidance. Last earnings, we got guidance of about 1.8 million vehicles. If Tesla raises their guidance to 2 million vehicles or potentially more than that, that's going to be a big reason to buy Tesla stock. Not to mention, if Tesla does say, hey, margins are likely to get better from here, we don't think we're going to have to cut prices anymore. These are all things that could end up being massively positive for Tesla stock. And considering where the shorts are and the extreme amount of bullish option activity we are seeing, it's very real, or a very real possibility, I should say, that we get a gamma squeeze as well as a short squeeze following Tesla's earnings. If we take a look at the option activity that we seen on Friday, you've seen almost 1,300 hedge fund and institutional orders worth $500 million with a positive order value of 72%. This is one of the most bullish ratios that you have seen in quite a long time. And it looks like expiring next Friday, a lot of institutions and hedge funds are targeting that $300 call. That $300 call on Friday, seeing 56,000 for volume, as well as the 280 call, seeing over 44,000 contracts trading hands. These numbers are much larger than the open interest number, which is suggestive of, again, higher prices to come. The dollar amount that is currently sold short in Tesla stock is sitting at $26.63 billion, up 64% in the last 3 months. At the same time, again, Tesla is seeing about 96.5 million shares currently sold short. These are the highest numbers in the last 2 years. So there's a lot of people betting long on Tesla, betting that Tesla rallies after earnings. And there is a ton of people that are betting short on Tesla, betting that Tesla falls after earnings. There's a very real possibility that Tesla stock could ultimately crush anything that the shorts and the bears are expecting. And this could cause Tesla to have a Nvidia moment on their next earnings. Can we talk about that? Potentially. That is what we could be setting ourselves up for. As we expected, coming from this Twitter Space call with Elon as well as many others, was an update of how XAI, or really just new information about how XAI would interact with Tesla as well as his other companies. And Elon said his new artificial intelligence will collaborate with the automaker both on the silicon front and the AI software front. So actually producing some of the chips that Tesla is putting in their vehicles. Elon said that's sort of a Tesla question, and he was asked whether XAI would potentially use NVIDIA or Tesla-made silicon for data processing, and he said that's sort of a Tesla question. Tesla is building custom silicon. I wouldn't call anything that Tesla is producing a GPU, although one can categorize it in GPU equivalents. He then spoke about Tesla's in-vehicle hardware, which enables the company's advanced driver assistance systems to work in its cars. The systems are marked as autopilot and full self-driving capability in the US. Musk said on Twitter Spaces on Friday that Tesla's hardware 4, which is shipping in now, is 3 to 5 times more capable than hardware 3, and promised hardware 5 would come along in a few years and would be 4 or 5 times more capable than its current version. The CEO also discussed Dojo, a supercomputer Tesla is developing for AI machine learning and computer vision training purposes. Tesla uses video clips and data from its customers' vehicles to improve existing software or develop new features. Now, this is somewhat along the same lines as I expected. He kind of gave us that development. The XAI is indeed going to work to enhance full self-driving, but he did not try to overpromise on things. And this is kind of what we've seen recently from Elon. As he has gotten sued so many times, he literally has a lawyer go over everything that he plans to say, any tweets he plans to put out. So it's no surprise that he didn't overpromise here, although he kind of did. He said Tesla's Hardware 4, which is shipping in now, is 3 to 5 times more capable than Hardware 3. That's kind of suggestive of much better full self-driving to come, and maybe getting close to a point where we could actually consider robo-taxis a near-term possibility and not something in the far distance. So that is going to do it for this video. Hit the like button and subscribe to the channel on your way out if you made it to the end of this video and you want to stay up to date with everything else happening on a day-by-day basis with Tesla stock as well as the broad markets. We keep you up to date and help you make money. If you guys also want to come trade with me live in real time, like I said in the beginning of this video, again, link down below in the description of this video. Come try it out. If it's not your kind of thing, then leave, cancel it. Can't do too much harm. It could be a really good tool for you guys to use as well to come up with new ideas and, again, hopefully make you more money. Check out the link for merch as well as the link to get yourself free stocks down below in the description of this video as well. You guys have a great rest of your day, and I will see you in the next one.